No.
Okay. Oh, we're just going straight into it. Okay.
Straight into it, man.
All right. Let me get some stuff set up.
All right. What's going on, everybody? It's Friday, post-market, 3:30 p.m., July 17th. I'm just hanging out here, drinking some whiskey, and I got Fassel on the call. Oh, I didn't even tell you, Fassel. Yeah, I got this.
I know, dang. No wonder why you were slurring a lot talking to me. Oh, okay.
No, it was a good week in the market, so I was like, you know what, why not? But yeah, man, I wanted to get you on this call because every Wednesday and Fridays we like to discuss the stock market, and you always have a unique perspective. So I wanted to hear what your thoughts are, man. What's been going on this week? What did you think about the market this week, and how did you position yourself or change your positioning, if at all?
Yeah. This week I was expecting a lot more. I came into this week thinking it was going to be a flat to down week. Overall, I think though it primarily finished up. I was not correct on that part, but I'm still holding firm that the market should come down. That's what I'm betting. I'm currently around 7 to 8% long. I've cut down my long exposure tremendously over the past 2 weeks. I even got got rid of some of my safer trades today with cutting CCI and Verizon. But I primarily continue to be short tech. Roku is a big short of mine right now. That did pretty well today. And I'm also short the casinos too. And I have a good amount of short in the small caps, but I think that's also a little bit like my short positioning is a little bit, I think, tough for me to dissect right now because one of the trends that's going on in the market is small caps and value sectors. They seem to be there's some built up momentum that's now driving them, and they're actually the main drivers of this market. Whereas big tech like Apple and Microsoft are actually taking a break. And so, the XOK short that I got in 2 weeks ago has worked out fine, but that small cap short has I think I'm down like 3 or 4% on it. So it really hasn't given me the signals to cover. I haven't seen enough strength, but so far, the fact that these value sectors continue to do well, and I think I talked about a little bit in my note today. So largely the value sectors have done well today, but I think we're starting to see a little bit less unity as far as the entire value sector momentum. We're starting to see it split. Housing and industrials are clearly the best of the value sector group. And energy and financials, I think, are still going to lag. And I think they have a lot more downside over the next 2 weeks, despite financials reacting pretty well to their earnings this week. But in regards to small caps seem to be that group that's kind of in the middle. I think they're doing okay, but I would put them closer to the winners of the value sectors. So that may be a position that I'm looking to cover sometime next week.
And do you mean small caps as in the IWMs, or is there
Yes.
another ETF you're shorting?
No, IWM is it. Yeah.
Okay.
That is the main one. And so, it's been a little bit of wild ride. It had a really good day Tuesday or something. It just gapped up like 3%, 4%, and it's come down since then. But, that's my decision for next week. Today was really interesting also because throughout the week, we've seen high growth stocks really start to come down a little bit with their big tech peers, and they haven't done as well. Even as the market has taken up, when you had small caps rise, that was a day where high growth actually sold off. But today, I actually saw some pretty nice things from stocks like Coop, Okta, CRM. There was finally some buying in these stocks, even though we had a really high growth leader like Netflix sell off on its earnings after it missed EPS by like 30 cents or so, which is crazy to me because the stock was pretty much priced in perfectly. And the fact that it only went down, I expected the stock to come down maybe 10 to 11, 12%. And I don't think it came down nearly that much. I think it closed down 40 points or so. Yeah.
Well, from its high, it's down 14%. So you mean like it should be down further from post earnings, or is that what you
Yeah.
mean?
Yeah, definitely. I
Okay.
think after the earnings were released yesterday, the stock was down 10%, and I actually thought it would come down even more at the open. But not only that, in the past, when Netflix has missed or hit it on the quarter, that has actually taken a lot of these high growth stocks either up or down, and it's really become a leader throughout this entire year of the entire high growth sector. Even if you're talking about software names, cybersecurity names, just high growth stocks in general, they usually follow events like Netflix's earnings. And it was really interesting to see, Netflix come down, but the stability in the morning and then the strength coming near the close in a lot of these software names and cybersecurity names. I was really close to pulling the trigger on Fortinet this morning. I did not end up doing it, and I pretty much regret it. But I think
What
hopefully
was
next
the ticker?
FTNT. This is probably one of my favorite cybersecurity stocks. It's a fantastic stock. It's pulled back to a very nice level, and I think it should end up coming back anytime soon. But anyways, I just really am just curious. I like there's so many diverging signals that made sense before, but they're not carrying over during this period. And it's not just the fact that software and stocks like Apple and Microsoft are not trading together, which throughout this entire recovery cycle, both those stocks, both those stock groups, big tech and high growth, when you would see one move up, you would usually see the other one follow. This is the first time where we're starting to see a divergence, but I don't know. It just looks like software and these high growth stocks want to be bought, and stocks like Microsoft and Apple may end up taking more of a pullback over the next week or so as their earnings come out, I think over the next 2 weeks.
One of the more puzzling things about this market is how aggressively high growth and tech have actually moved up. And especially given the fact that how the entire market as a whole has moved up in the face of, the grim reality of what's going on with the coronavirus, the underlying economy. You and I spoke about this just before we hopped on live. Do you think that, first of all, the market is sort of a bit overextended and potentially we might be in that bubble territory or venturing in that bubble territory?
Yeah, yeah, but like this is my first bubble, first of all, so I don't really know exactly what kind of signs point to the end. But so far, like I'm short right now, and I'm not feeling too good about it. Even though I do think we are in some type of a bubble, I think there are signs of really healthy rotation out of these tech stocks that seem to be in some sort of bubble fashion and into other assets like industrials and housing. I think that's very healthy and a sign that this bull market may want to continue to go up despite these high valuations in other sectors. But yeah, I think as I've been saying for the past month and a half, this is a very secular market, and even though one part of the market, whether it's software or stocks like Tesla or Neo or the electric car companies, even though they may be in super highly inflated valuations, I'm not going to fight it, and two, that doesn't mean the entire market, when they do end up coming down, the entire market will come down with them. I think based on what I'm seeing now, money is really moving in a healthy way into, like I said, industrials, healthcare definitely has been a strong winner this week, housing, and then utilities. Surprisingly, NEE was a stock that I'm kicking myself because I got out a little bit too late. I sold this stock 2 days ago after making like 9 or 8% or something, and damn thing has popped up so much yesterday and today. I mean, I missed
Yeah.
out on maybe 6, 7%, and this is a utility company, one of the more safer and defensive sectors in the market. Um, and you're seeing just massive moves in these types of stocks. So uh, I wouldn't say that it's necessarily a bubble because there is healthy rotation going on in other parts of the market, even as stocks like I said, Apple, Microsoft, and Amazon continue to see selling throughout the past couple of days.
Yeah. Well, I'll tell you guys one thing. I mean, as someone who's done consulting work for NextEra Energy, out of the utility companies, they are doing some phenomenal work. They're doing some phenomenal work, at the bottom side of alternative energies. They're just, one of the more premier utility companies. I don't really even want to call them just a pure utility company because I think they're more than that, especially based on what I saw when I did some consulting work for them. So just for our viewers, make sure y'all keep an eye on, NextEra. Again, not investment advice, just a free tip that, I've been watching NextEra since a good year and a half. I think Faisal, I think you and I had NextEra conversations a good year, almost a year ago, right?
Oh yeah, I think when we were talking about the stock was at like $200, and you gave me some really good insight into the company. And
Yeah,
when I looked at the fundamentals, this company really stands out in terms of if you want to find growth in a safe sector like utilities, this is maybe the only stock that you could buy. It's the growthiest utility stock that I follow. It's pretty much one of the only utility stocks I trade, other than like Southern or SO or I don't know what's another one. I think those are primarily the two, but yeah, it's pretty much the growth utility of the entire sector.
yeah, fair point. Um, what did you think about the bank earnings this week? I was telling some of our members that if there's any bank that I was bearish on going into earnings season, it was Wells Fargo because, well,
I
first of
already
all,
know that. Everyone already knows that.
you
You
know the
hate
thing
Wells
is like,
Fargo.
yeah, I mean, I feel like a lot of people overlook that banks overall are seeing significant loan deterioration on their balance sheets. The only reason, some of these banks like JP Morgan Chase, Citigroup, and Goldman Sachs, the only reason that these companies actually did better is because they had sky high trading revenues. I mean, JP Morgan absolutely demolished this market. Unfortunately for Wells Fargo, they serve smaller businesses, consumer finance clients, and they've racked up a lot of loan losses on their books. So for me, it was kind of like a easy pick. Like, okay, well, if I'm gonna look at any stock, I'm gonna short Wells Fargo, and I'm gonna probably go long or buy some call options on J.P. Morgan or Goldman Sachs. So, what were your thoughts? I guess what did you come out with?
Yeah. First of all, I think if you're going to play banks, exactly the way you said it is the perfect setup. I think actually Citigroup is a good one too. I like their earnings call. For the most part, they said some great stuff about trading revenues, and while things were not as peachy as the stock reactions may indicate, I don't think things were as grim as people thought. The worst case scenario coming into it. I didn't think the calls were necessarily good. I was very surprised to see these stocks react the way they did. I think J.P. Morgan may have gone up maybe 4% from its earnings date or something like that. So that was a surprise for me. I thought at any point they should just stand still, but just how the week closed out for the financials, I really do expect the sector to come down. I don't think that the momentum that we saw after all the earnings have been cleared, especially from the companies that reported well, like I think Citigroup, J.P. Morgan, and Goldman Sachs, their reactions really didn't. Uh, they just didn't prompt any reason for me to get into this sector because I'm looking at these stocks thinking, okay, if a lot of the risk has been cleared because the Fed is saying we got your back or everything like that, I want to see these stocks trade above a certain level for me to get comfortable. And so far, they really haven't done that. And Goldman Sachs, I think, after these quarters, should probably be the main bank besides JP Morgan to look at because they're so investment bank oriented. But they really showed me probably the weakest signs out of all the banks. So I think that's something to consider. And I would be very surprised if these stocks have a very good week next week.
Yeah, I would agree with that. Um, let's talk about the VTI. So, for those who are not familiar with this is basically an index that gives us a approximate of 100% investable U.S. stock market assets in the large cap, mid cap, and small cap space, as well as micro cap. Um, if we're looking at the entire stock market as a whole, in the context of VTI, we're coming up towards a critical trend line right here on VTI. We still have a gap up here. Now, I think you and I have spoken about gaps earlier, just from a technical perspective. But if we do push up, say past this trend line, I mean, we're probably going to go up and fill up this gap, and that would probably mean that the S&P 500 is going to fill its gap right around this 3,300 marker. Um, any thoughts, first of all, on the technical aspect of how these gaps work, and what did you, I guess, what do you think of the overall stock market as a whole, and its sentiment? Like, are you feeling like there's euphoria in the market? Do you think that markets could push up more? Maybe we spoke about this a little bit earlier, but I just want to reiterate like what your thoughts are.
Yeah, no, that's a great question. As far as sentiment, I don't know if it's euphoric. I think even though we do see signs of euphoria, I think people are very aware of it. Investors are quick to react to it, and I think they are more than willing to short this market again and again, thinking that next week is the week that's going to be the one to bring it down. So I don't know if like there is euphoria, but there's also over bearishness in some cases, if that makes sense. So I think it's a nice mix, and I think it's a right mix for the market to go up, in my opinion. As far as the gap is concerned, when I look at things like that from a technical perspective, I really have to think of myself, okay, if the NASDAQ is already extended as it is, Apple and all those other stocks are starting to come down, what exactly is going to propel this market to the upside? And that's why throughout the week, I was really trying to monitor the rotation, as I mentioned before, out of these tech stocks and high growth players into these sectors like housing and industrials. And so far, I came away thinking, okay, even if tech does pull back, even though it really weighs a lot on the S&P, I think I forgot what percentage it is, but it does weigh a ton. I think more than any other sector. Even if those sectors do come down, I think we could see the market grind higher a little bit and continue to close that gap. I don't think it's going to be in a really fast fashion, like a spike up of like 8% in a week, like we had, earlier in the year. But as money moves into these industrials and housing stocks, so that they get to their all-time highs, that's going to be the main driver that will close that gap. Now, if I start to see some deterioration in those sectors, then I'm going to lose faith. Then it's going to have to be about, okay, are the apples being bought? Are the high growth stocks being bought? And if those are not, then no, I don't even think we're going to even come close to that gap.
Yeah.
But in my mind, in my theory, there is a plausible reason or plausible momentum that can take this market higher, but it's not going to come from tech.
Right. And I am actually not certain of the exact percentage of how much tech is part of, say, the Qs or S&P 500, but I know it's a significantly larger percentage than it was, say, pre-corona. And I'm actually in agreement with you that if tech does come down, especially harder, because we've already seen, actually, if we're starting to look at Amazon, right, from its key high that we just put in a couple of days back, we're already down 11.4%. If we're looking at Tesla, even, I think Tesla is also down like 12 or 13%. Let me see right there, or 16% or so. I think Apple, let me see how much Apple is down. Apple's not down a whole lot, but from its key high right there.
Yeah, not really.
Yeah. But the point is, I'm kind of in agreement with you that if tech starts to slide, that's a lot of weight on the market to kind of hold the entire market up. And then if you start seeing a rollover in energy and financials, especially industrials, well, I think there you have it, right? This might be your broad market signal that, okay, maybe the music's about to stop, the party's about to stop, and the shitstorm's about to hit. Now, this kind of brings me into the larger point, which we were kind of discussing earlier, is the Fed has pretty much flooded the market with unlimited QE, unlimited liquidity. We've now seen the top billionaires in America add about $170 billion of their wealth, right? The wealth gap has clearly widened. We have almost historically low interest rates, due to the Fed intervention. It's my understanding that since 2000, and I did some homework on this, that these lower interest rates, even with Bernanke, have essentially been the precursors of bubbles. And then on top of that, you add QE, which again further accelerates those bubbles. So given the fact that the Fed, even though they can keep handing out, this free money due to low interest rates, keep flooding the market, keep buying up, LQDs or corporate bonds or junk ETFs, what they cannot do is they cannot create demand. They can't create jobs and they can't create individual worker skill sets. So how are we ever going to fix the economy if we're already facing some of the similar issues that we were with coronavirus right around March, where we start to see increases in cases, increases in deaths, states going into tighter lockdown modes, and then on top of that, the economy has already deteriorated from the quote unquote first wave. Do you think that these are matters of concern, or do you think that the Fed liquidity can just solve all problems forever? I mean, like, what more can we do? The dollar is unmoved even after all this printing. The markets are at all-time high. Unemployment is closer to like 13 or 15%. I guess my question to you is like, how do we even bring the market down, or how is the market ever supposed to come down?
That's a great question. I wish I knew the answer to that, but I think basically what the Fed has done is it has increased the scarcity of U.S. debt, and so that debt is still attractive to foreigners and people of interest who are interested in buying our debt. It's much tougher to get that because the Fed is just increasing the scarcity of it. So I think from the market perspective, the Fed is doing exactly what it has to do to keep this market up. And trying to fight that trend, I don't think is a smart idea, especially if you're in the bond market or something like that. I don't know what it could be to take this market down, because like one factor that I'm keeping an eye on is that there have been just so many retailers that have been added into this market. I think the Fed is scared that if there is some type of drop, let's say a really big drop, of 10 to 15%, 20%, there could be a lot of average Americans that will lose a lot of money. And I think during a time of crisis like this, that's the last thing that the Fed could want. And
Well, I just want to interject real quick. Here are some of the numbers that you see on my screen of new retail brokerage accounts, skyrocketing to 1.65 million in the second quarter, far above the consensus of 1.08 million, and more than 4 times last year's figure, around 386,000. So daily trading activity in the second quarter, and again, this is all retail brokerage, and this is just Charles Schwab, has skyrocketed to 126%, from a year ago. So, I mean, you're absolutely right. Like, retail is heavily in the market right now.
exactly. And so I think the Fed is keeping that in mind, and so now I think one of the main goals is, even if there is a drop, even if there is a black swan event, they will come in and step in, to the point where I don't think the market will ever come down to the lows, or not ever, but definitely within the next year, or if when we do get a big drop, it will not come down to the lows that we had before. I don't think the Fed wants to deal with that, wants to deal with a lot of Americans losing a ton of money during a pandemic and economic crisis. So it's really a weird situation, because in an economic crisis, you would not expect to see this much retail investor participation. And I think that's what's throwing everything off. But it also has to add to that floor aspect that the Fed will come in and save the day, because there are just too many average Americans that are now in the market. So,
Yeah.
I think that's always on my mind, especially when I'm shorting the market. That's definitely on my mind, as far as how low can this market go and where my targets are.
Yeah, and beyond that, I mean, the Fed has kind of gone a bit to the wayside, where not only have they kind of gone into the market and put in all this liquidity, they're not helping solve the real issues that Americans are facing with, people losing jobs, or small businesses being shut down. In fact, they're going out and purchasing these Amazon bonds, Apple bonds. It's almost gotten to a point where it's like a banana republic. Like, what exactly are you doing? Like, do you even care about the average citizen?
Yeah. No, I mean that's so crazy that it came out and they were buying Home Depot, AT&T, Amazon, Apple, all these companies that are going to be totally fine. I mean, hell, Home Depot, like I know they have a lot of debt, but damn, like that company is on fire right now. Same with Apple and Amazon. Why are you buying their debt and not buying a ton of Darden DRI that's facing, you know, not even just situations where they can't even open, that like the demand has dropped for their services so much they're not even able to upsell on products like alcohol or anything like that inside their restaurants or anything. Like those are the businesses that are hurting extremely bad. And the fact that they aren't loading up on restaurant companies or what's another sector, just the sectors that are primarily hit, they're not buying them, which is crazy.
Yeah, yeah, I know, and I think that's the most appalling part of all this is, as traders and investors. I mean, we often want the market to go up, and we want the our positions that we're in to go up. But at times, you also have somewhat of a moral responsibility where you feel like, okay, if I'm buying, some of these companies, I'm hoping that they're going up because I want the Fed to also, in some way help out the average person while I also make money. But in this case, it's like I don't even, as an investor, feel like investing in Darden because I'm like, well, it clearly seems like the Fed does not give a shit right now about the average person or small businesses. So what am I going to do as retail? I'm going to pile into stocks like Tesla or Amazon that are already overextended. And then what happens, when the music stops, is those stocks would come crashing down. And like you said, those retail are going to be even significantly more impacted. And at the same time, some people may not even have their jobs because the economy as a whole is not doing well. So they get shot, in both legs. It's like, well, I don't really have a good job. And then when I tried to go out into the market and try to buy, Tesla or Amazon and all these stocks, I got shot in the other leg, you know?
Yeah, that's the dangerous part about buying it in a market that seems to be very disconnected from the real economy. I think we haven't really experienced the downside of that yet, but I think it could be coming very soon. And when it happens, I think it'll be very shocking for a lot of people just how volatile this market can be. Like I know it's gone up so much for so long, people just think it's going to keep going up, 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 because this coronavirus. Eventually, we will get through everything, but I don't think it's smooth sailing, and I think people are assuming that everything is peachy. And there are a lot of smart economists that point to a lot of data that we are in a V-shaped recovery, but I don't see it. Like I think there are just too many permanent job losses to say that it's a V-shaped recovery, at least in the long term, maybe in the short run, because we literally went from stopping to then like fully stopping to then trying to go 80% and now 90%, 100%. But yeah, I think there's just so much risk, and definitely putting a lot of money in the stock market now is, if you're not experienced, I think it's very risky. You should always have a good amount of cash on hand. But the data has suggested retailers do not have that much cash on hand. They're like fully in the market.
Yeah, yeah, they definitely are. I mean, you can see actually the Robinhood positioning. I think it's called Robin Tracker or something. Um, you could see position increases, on things like Tesla. I think people piled into Tesla right around the point where it was at $1,500 or $1,600. So, like, I mean, that is the definition of retail. Effectively like buying the top. You know,
Yeah, totally agree.
uh, let me see here. That there's this leaderboard right here that I was looking at.
Damn, I'm so mad about space too. When you pulled that stock up,
Oh,
I just got a little bit mad.
yeah, man. I actually missed the breakout of space too. I even had an alert set. What was that? Like 20.75 or something, somewhere around here. And it broke out and then took off the next day too with a big gap up.
Yeah. No, like I had a really good amount at $15 and some change, and then it went all the way up to 18 and a half, 19, and I got out somewhere around I think $18 or something. And man, I just did not think it would have this type of move over the next couple of days. I think they got a new CEO yesterday, and usually that type of event is, it could be a game-changing event for a company. Is actually, if you look at the history, when a company does end up getting a new CEO and it's been in decline and in crisis, when that new CEO does come in, that is usually the bottom of a stock. I can't remember what stocks have it, but do your research. I think there's definitely some weight to that. But to see the stock move up again after the monster day it had yesterday is unbelievable.
Yeah, I'm hoping for retest like right at this top area of the resistance, right around like $21 or so. Um, that would be a pretty fantastic buy for me. But other than that, I mean, if I have to get in, on Monday, right around 24 or so, if I get an opportunity, I don't mind at least, slowly easing into the position. Are you thinking about getting into space, or are you kind of gonna let the position go?
Yeah, I definitely want to get into it. Because I like the prospects of the company. I think their technology can go into a lot of different areas that I can see technology moving into and the world moving into, not just space travel, but just transportation in general. I think they have the ability to revolutionize how we go from place to place. But I want to wait till it comes back at the low end of the range where I picked it up first at like 15 bucks or so, maybe 14 and a half, but I'm struggling with the idea that it may never get that low. So I'll see how it plays out. I think if high growth stocks start to sell off again, I think we'll see this stock come down as well. But when I start to see the bottoming in those software stocks, high growth stocks, that may be when I take a shot on it. It's not really dependent on the individual technicals of space itself, but more so how the group, when the group starts to bottom out, that's when I'll take a shot on it.
Yeah, fair point. Um, I think Microsoft earnings are coming out soon.
I think next week, yeah.
Next week. Yeah. What are your thoughts on that?
Oh man, I don't know. I think they're the best company in the market to buy. If you're a rich guy who has a lot of money and doesn't care about buying something for the long run and buying something that's relatively expensive due compared to its history, Microsoft is my number one pick. Period. Like I think it's the most well positioned company. They're doing some great things in their cloud enterprise space, and they have a new console coming up that I think is going to be good. Um, but I actually don't know. Like I don't know how the earnings will be. I think there's a lot priced into this stock at the moment, and people are expecting a lot. I think just as I said, it's my number one stock, and I don't think that's not an unpopular opinion. I think there are a lot of people who would say Microsoft is the number one stock to buy. Um, I'm not going to play the earnings, but I'll definitely be watching the reaction. I think it's possible that even if they do post a good quarter, they could still end up coming down. People have made a lot of money in this name, and I think that earnings could be a time where people start to take profit.
Yeah, fair point. Um, bringing up Microsoft, there's this famous saying. I think Peter Thiel said it once. He said that being long Microsoft and Oracle is basically being short on innovation. I think what he's implying is, there's so many great smaller companies that are trying to come up, that it's very hard for them to come up because companies like Microsoft either hold all these patents or put up all these roadblocks, due to their size, that innovation is just really tough. I mean, just from a broader perspective, like, first of all, do you agree with that?
No, I think in the cloud space, Oracle has lost their edge. I think Oracle is in real deep trouble. I'm a long term short on that company. I'm not positive on their transition from being half hardware, half software to now they're trying to be like a 75% software company. I'm really not that optimistic about Oracle at all. And I think they're definitely being hurt by a lot of the smaller companies that are just producing unbelievable technology in the cloud space.
Yeah, fair point. I think going along with Oracle, I think we had this conversation a couple of weeks back that VMware is kind of in that same group to me. No, I'm very short on VMware.
Yeah, I think virtualized, what was it? Virtualized servers was a unique thing for them a couple years ago, and I forgot who else has it now. Like that technology is now being not copied, but I guess being mirrored in other companies. And once you lose that technological innovation edge, for an expensive company like VMware, that's not a good sign for your stock price.
Yeah. I think was it a couple of years back? I don't know when exactly Dell bought VMware, but I think after they did, you know, I was hoping and thinking that because I'm a big fan of Michael Dell, and I personally think that Dell is a great company, and I was hoping that they would do some great things with that partnership, but it really didn't really go anywhere. It's like, well, what was the point of like buying this company? Other than just acquiring their business, you didn't really grow it. You didn't do anything special with it. Like for
Yeah.
example, if you take the argument of uh, Facebook buying WhatsApp or Facebook buying Instagram, I mean, you buy first of all the client base, and then you also down the line have huge potential of utilizing that client base, utilizing that data, going forward. For me, when I saw that acquisition of Dell and VMware, till now, it just seems like it kind of was a waste.
Yeah, I kind of agree. And VMware as a company has done some interesting things. They were a very healthy company. I want to say 2 years ago. I'd actually traded the stock multiple times, made some money in it. I want to say 2 years ago. And then I think they made some really questionable acquisitions. They bought Pivotal Software and another company at like really weird prices. And I remember reading the analyst comments saying like this is kind of an overpay for both of these companies. And then you found out that there was like some like the CEO of VMware knew like the CEO of Pivotal or something like that. They were somehow related or something, and it seemed like a very like just too generous of a deal. Like, oh, I'm bailing you out type of deal. And I think ever since that, the company has really done bad, and I think draining their cash reserves on that type of acquisition has really put this company in a bad situation. So, I mean, the technical trend is clearly downwards. This stock is not going up anytime soon. Even as high growth has rallied so much, this stock has stayed below its breakout levels.
Yeah, yeah, fair point. Um, well, there's nothing else on my end. Anything in particular you want to talk about?
Oh, let's see. Biotech had a really good week, and I want to say I've been talking a lot about the healthcare space, more specifically the medical device space. If you guys are in the Discord, I've mentioned stocks like uh, Boston Scientific is probably my number one name. Medtronic, Abbott, EW. Those stocks had a phenomenal week. If you guys got into them, congratulations! Like you made probably 10%, 12% this week. And I think a lot of these stocks are still undervalued. So they're still being held down by the fact that elective surgeries are not, um, uh, I think they are coming back actually. But in places like Texas, where I live, there's still no elective surgeries. And I think that has put a little cloud on a lot of these stocks because as long as elective surgeries continue to not not happen in hospitals because of COVID, these stocks are not seeing have not seen that much momentum compared to their other healthcare peers like the pharmaceutical guys. But this week was the first week we actually saw significant momentum and volume into them. And I would say, despite the fact that elective surgeries are still, I think, coming back at a slow pace, I think these stocks are pricing in the like tremendous growth that they're going to see over the next 3 to 4 years as far as medical technology innovation. So I would definitely keep an eye on Edwards Life Sciences, Boston Scientific, Medtronic, because I think just based on what we saw this week, that is the one industry in the healthcare sector that I think is not extended and should continue to see a lot of innovation and growth over the next 1 to 2 years. So if you're looking at a medium to long-term investment, I think you got to look into this space. There's Stryker is another one that's okay, but I think Boston Scientific, Abbott Labs, and Edward Life Sciences are probably my top three. That's
Yeah,
not investment advice. That's just my personal opinion.
yeah. I was actually just looking at Moderna too, and I think one of our members asked today about Moderna, and I was just telling him I was like, I think Moderna is going to put in a new all-time high like this, well, next week, but it looks like it did it just today itself. It's up 14%.
Yeah.
Yeah.
No, I mean, you saw the momentum carry with a lot of these small cap biotech names. Like that's really what's been killing me on my small cap short is a lot of these small cap biotech companies have just been rocketing this week. And so I wouldn't doubt that Moderna makes another all-time high because that momentum has not slowed down. Even today, it was, I think IBB was up 2%. It was one of the best industries in the entire market. So I would not be surprised if Moderna sees another all-time high, but keep in mind, I think that that stock, when it pulls back, it'll pull back harder than it goes up.
Yeah, fair point. Well, awesome, man. I think we covered a lot of really good topics. We had some viewers and we answered some questions. So hopefully y'all enjoyed this. Please do hit the thumbs up, guys. There's a free Discord link below. If y'all want to join our Discord, we discuss a lot about the stock market, what trades Faisal and I are taking. So the link is there if y'all want to join. Until then, we'll catch you guys Sunday for another analysis, and let's hope for a big week ahead. All right.
Peace.
Y'all take care. Cheers.